The latest jobs data has the markets rethinking the Fed funds rate moving forward. We'll be discussing that, everything else that is impacting the markets, how the prices are fluctuating heading into the weekend, and more today on Money Never Sleeps. Welcome back, everybody. As we get going today, do us a favor, hit that like button, subscribe to our channel if you haven't yet. Nothing that Kevin or I say is financial advice. We're just a few guys who love following the markets. So please do your own research and due diligence before making any sort of transactions. Kev, we got a jobs report that people are trying to spin in whatever direction they want the market to go. Some are saying it's bullish. Some are saying it's bearish. We'll try to look at it from as even a keel as possible. But I want to know, what was your first thought when you saw the data this morning? 216,000 jobs were added allegedly in December. I say allegedly because every single jobs report has been revised down. So who knows what the fuck to think anymore. The unemployment rate down to 3.7%, or at 3.7%, same as last time, was supposed to be up a little bit. The thing that is concerning for some is hourly wages increased 0.4% month over month and 4.1% year over year. That's up from the previous month and higher than expected. So when you see this data, how do you think the markets are going to be impacted in the months ahead?
Yeah, man, when I first saw the numbers, I mean, first thing that came to my mind was a 4-letter word: fake. I think the numbers are very misleading here, and instantly I thought, like, okay, well, let's think of what December was. December is a lot of hiring for people in retail because we know that there's going to be, more shopping, more spending, more or less in, for holiday reasons. But when I think about that, it's like, okay, well, if there's a lot of people who are currently, employed for this month, what happens if the earnings are bad? So I instantly thought of earnings season when I first saw those numbers, because I'm like, I mean, they're not going to want to keep these people if they're not doing well financially, right? I mean, it's something every corporation has to be asking themselves going into earnings and the rest of the Q1, even into Q2 this year. So that was the one thing I first saw. The other thing I saw was how many full-time workers had gone down, opposed to how many people were hired part-time, right? And I do want to show this on the screen because the number itself, 3.7% unemployment, doesn't do any justice to what's actually happening here. If we're starting to see, and this is full-time workers employed from the Bureau of Labor Statistics, you can see that in the month of December, we went down roughly 1.14%. It might not seem like a lot, but that's 1.5 million jobs, or 1.5 million people who are no longer working full-time, right? And we know that it's 763,000 that went up in terms of part-time. So what this is telling me is that more people are working multiple jobs in order to make ends meet. And it's also showing me that a lot of these businesses, maybe it's not coming out that they're not hiring as much. Or, I think that we're at a point where they're not hiring, but they're also not firing most of these these institutions, these corporations. But the ones that are laying people off, well, it's pretty evident in this data here. The full time is coming down, and think about this amount of people who are full time that are cut to part time as well. As hours continue to be cut from people and wages continue to go down, well, then this just means that there's less hours for them to work, which means that they all eventually will become part-time workers. And this is just adding to this number here. So seeing this curve down here, it's not a good sign. I mean, if we look at this chart in its entirety, we can see that this is the COVID crash down here, and we haven't seen a move down like this since we haven't. I can't find a spot on this chart where it's dropped 1.14%. I mean, here it's 0.26%, here it's 0.14. You could say 0.44%. This is a whole percentage point that we dropped. So that's a very interesting thing to see, especially in the month of December when you would anticipate a lot of people being hired. I don't know if this is just showing that there is some weakness in the labor market, but it doesn't seem like a good look at all for what's to come, especially after the earnings season.
Yeah, we saw that the amount of jobs last year full-time jobs added was pretty much flat, but part-time jobs increased significantly. So that tells me that a lot of people, like we've discussed, had to get a second job, or God forbid, even a third. So
Yep.
I don't, from that vantage point, I don't think it's a great report. And then we also saw the revisions coming in, significantly lower than the numbers that were reported, like revised way, way down. And I don't know what is behind that. I'm not going to like wildly speculate on things. It's just weird, and I think the market, over or underreacting to it is not ideal. If we look at the impact of this on the market and how it is pricing in rate hikes or rate cuts, we see that from yesterday to today, the odds of a rate cut in March move significantly in the direction. Actually, no, it's bounced back now. So it's really weird. Like when I looked at this earlier, about 15, 20 minutes after the report came out, it showed almost 50-50 of there being no cut or 25 basis points worth of cuts by the March meeting. Now it's back to, the market pricing in about a 64% chance that we'll have at least one rate cut. So that is pretty wild to me, how this market is just, once again, it shows, the way that I'm interpreting it is a huge amount of uncertainty over what's going to happen next. And in that situation, the thought that we had earlier this week of like just do less, I still maintain is the best approach to take. Like if this means rates stay higher for longer, cool. I'm in a place where I can just keep earning, almost 5.5% on my cash, and I'm fine doing that. Like I don't need to be constantly chasing the next 100x. Like I'm good just sitting back and waiting for the market to kind of show us what direction it really wants to head in, while other people, whether it's people who are over leveraged and they're trying to make money back, whether it's bigger institutions who missed out on the gains last year and they're trying to force something and make up for it this year. Like you can want the market to head in whatever direction you please, but that doesn't mean jack shit. So it's once again, man, just fucking do less.
I think a lot of people need to be humbled. I'm sorry. I think that goes for bulls and bears. I just tweeted out that I was upset with,
Yeah, I saw that. I liked
reading.
it.
Everyone just knows fucking nothing, but they love to talk. And that's how you know people are stupid. They think out loud. Especially, you're going to find a lot of that on Twitter. But there is just so much shit that's going on out there right now, and people just aren't fucking focusing on it. And I think doing less really is the best strategy right now. Just stack cash, keep working. I mean, if you can get more hours at work and just stack that cash and you can afford to, dedicate that time to making money, I think that's the safest and the best thing you can possibly be doing because I'm looking at this right now. It's like there's a lot of things I really want to short, but I'd rather have the cash on hand because I know what happens after this market dumps. So I could, predict and plan ahead if I have capital to buy certain things when things start collapsing. Gold being one of them. We'll talk about that later. But there's other things in the market right now that are just screaming absolute mania. And it's I'm going to share my screen once again because these are getting really interesting here. The reverse repo level is dropping significantly. Yeah, I mean, on the month, it's down 7.64%. I mean, it popped up all the way to about 1 trillion at the end of December. Here we are today at 664. I think it's at 694 today. The counterparties they took about an hour ago, seeing how much they needed. So that's where we are right now. I mean, that's a huge drop for the reverse repo. It shows me that liquidity remains to be an issue. And the other thing that's really scary here, and no one's talking about it, we popped again on the bank term funding program. It shot up again. And I mean, let's go to the weekly. On the weekly, it is up 3.97%. They added 5.397 billion to that. Guys, this red line, the closer it gets to this, that's danger. I mean, maybe this is why the banks aren't doing bad right now in the market across in general. But once we start getting towards March, I think this is going to be very problematic. And there's a lot of things we have to do to get before we get to March too, right? I mean, there's a lot of things that we're seeing over in Asia that are problematic. We'll talk about it later, but I don't necessarily know if people understand that maybe trading this market this year is probably the worst thing. And I think maybe the bond market is the exact reason why you're seeing some of those yields come down, because a lot of people just say, you know what, let me just lock in those gains. I'll take 5% for 2 years. And they were the early ones they bought at the top in October, and they saw what was coming. So it's going to be really interesting to see what happens. But I think trading this market in this year is just going to be an absolute shit show, to be honest with you.
Yeah, God, good luck. You know, maybe there are plenty of people out there who are smart enough to do it. There are far more who are not, but they lack the awareness to know that they shouldn't be as active as they are in this market because they will just get fucking clipped over and over again. Okay, that's enough for today's jobs report. Next week, there's big data coming later on Thursday with the December CPI reading. Will we see it continue to trend down the direction that the Fed hopes, or will we see a little pop up maybe? Who knows? But that's really about it. There's not a whole lot else going on as of now. Maybe we'll get some more Fed speakers talking. They are going to have their, their quiet period in the couple weeks leading up to the January 31st decision, but they'll still have a few days next week to potentially get out there and rile up the markets a little bit. What else do you want to look at as we head into the close of the first week of 2024?
Yeah, definitely.
Oh,
I want to look at.
also, let's talk about this. Hold on a second. Sorry. This fucking ETF thing. Okay.
Okay, let's do it.
Like, it's just so dumb. It's so we don't know anything. Like, it could very easily get rejected, and we may not find anything out today. Like, everyone getting so riled up that Mike Novogratz is tweeting shit, and Scaramucci, the
Fuck
mooch,
that guy.
is out here saying tweeting these very
It's
cryptic
done.
messages. It's done. Shut the fuck up. You're done. Like, it's absolute garbage what we are seeing. The just in plain sight market manipulation. I'm just so tired of it. I want this ETF news. Nobody knows what's priced in, what isn't priced in. We can speculate all we want. Let's just get the decision over with so we can move on with our fucking lives.
I'm gonna tell you one thing. Scaramouche, fuck that guy. Couldn't even do his job for 10 days. Literally hit his job for 10 fucking days, was out of there. Now he's on Killer Whales with fucking Mario Nawal or Nawal, whatever.
What
Altcoin Daily, all those guys.
a joke that is.
I can't wait to not see that. I'm sick, but I want to keep my lunch down today. I'm sorry, I'm being a little mean there. But yeah, it's the Bitcoin ETF thing. I think I do think that a lot of this is already priced in. Like, how could it fucking not be at this point? Because it's all they've talked about for the past, 6-7 months at this point. And especially after we got that mania pump back in October, you can thank Paulo Arodino and I don't even know if I'm saying his name right, but CZ and all those exchanges that absolutely pumped Tether into the market. Here, let's just look at Bitcoin now, because this is Bitcoin's chart is really interesting to me, and I think it's just a psychological thing that we're going to see when the ETF does get approved. I don't know when the ETF is going to get approved. Fuck, will it get approved? Who knows, right? I'm not too concerned about crypto right now because I genuinely think that is the Wild West, and also a death sentence if you are trying to build wealth at this point. And some people might not like that, but I think that when we look at this here, this does not look organic in any bit. I mean, the only thing I can say that's organic about this is it looks like a corrective move from what should have been a 5-way move to the upside, right? So that's ABC. We talked about that all the time. Now, what's probably a psychological level where we start to see a bit of a sell-off? It's probably going to be $50,000, right? I think that Bitcoin could get to $50,000 in a stupid way if the ETF does get approved. I'm not saying it's going to, but I think that it's very possible that we could push up there one more time. And the reason I say that is because if we look at this on the weekly, it's these weeks right here, the 16th, that Monday, October 16th, and then Monday, October 23rd, specifically this one where it shot up, 15%. It was up, how much is that? 4,530. And if we look at that on the daily, I mean, most of that was in one day, right? Here it is right here. Yeah, I mean, it was up $3,000 in one day, 10%. It's very possible we get something like that once again if the ETF does get approved. Everyone thought that was the ETF. No, that was Tether 100% printing billions of dollars. And they're doing that right now. Yesterday, they printed $2 billion worth of USDT. And then the CEO is like, oh, no, we're just trying to fill reserves. Shut the fuck up. We know what you did before. You're going to do it again. But this ETF 100% is going to probably be one of these. All right, this I'm going to show you what it's going to do. It's probably going to do this. And then once everyone fucking buys up here and you liquidate all those shorts, people that were shorting this thing, and it's going to happen when you least expect it, right? And then it's going to do something like that. And now, not to the extent of that, it's going to drop that much. But if we're going to say that the Bitcoin halving, I'm pressing the wrong buttons. The Bitcoin halving and all this stuff is going to happen the same way it does always. Let's say what's 40% from 50,000, right? Because we expect that there is going to be a retracement of some sort. Let's say right here. 40%, that puts us roughly right around 29,000 or so. And that's pretty much right back to where we were from that October pump that we saw from Tether. Would that make sense? Yeah, absolutely. Now the question is that the end of that move? I don't think so. I think we're going to lower lows because we're using the LDOA theory to say that this is one massive A, B, and then C correction coming into new lower lows for at least for this cycle. But yeah, I think that there's a good chance we could rally up really high. People are going to get trapped and then they're going to get hurt on the way down. It just seems so dangerous to be playing with Bitcoin at this level right here. I don't underestimate the fact that this market is, I mean, let's put it this way. It's a small market cap compared to TradFi, so it's really easy to move shit around. I think that alts could still rally insanely high if that's the case. People are just going to get excited, but it's a lot of money that's going to disappear right after we do get word on the ETF approval. If it gets approved, again, that's just something we have to keep in mind that 50K is definitely in our forecast for crypto, I think.
All right. It's a stormy forecast ahead for crypto. That is for damn sure. We're seeing altcoins take a bit of a hit. We see Bitcoin dominance start to trend back up. It is on a bit of a winning streak here, going back to last Saturday. Green every day on Bitcoin dominance. Also seeing the stablecoin dominance begin to increase, whether that's value leaving the market or people swapping over. Seems like maybe the appetite for higher volatility is starting to kind of weigh on people a little bit. Where else in the crypto market do you want to look right now? It's been a weird day in TradFi. We saw the VIX spike up earlier. We saw the dollar spike up earlier. Those have retraced as people have changed their opinions on what the jobs report meant. We're seeing, some tech rebounding a bit over the last few days. Nvidia is shoving it right down your throat today, Kev. I absolutely love to see that. This is what you deserve for speaking ill of my beloved Nvidia and my good friend Jensen Huang. But where else are you looking?
I'll leave the Jensen Huang comments for after the show. I won't shit on your bags in front of your face on your own show, J-Web. But for the TradFi markets, I want to do one thing before getting to TradFi, and that's I want to share something with everyone. It's that we've followed for a while, and we got kind of news this morning that this was happening. But a shadow bank in China just filed for bankruptcy liquidation.
How do you we should get into shadow banking first off, but how do you as a shadow bank file for bankruptcy?
I know, man.
I don't understand any of this. Like, what?
Maybe we should read the article and it'll give us an answer. It does, actually. Chinese wealth manager Zhongxi Enterprise Group has filed for bankruptcy liquidation after failing to repay debt. We knew that they were insolvent a while back. I believe that it was $64 billion that they were insolvent with. And we were talking about this. I think House was actually on the show with me a while back when we brought this up, and they said they were insolvent and we didn't expect anything. And then here they are today, filing for bankruptcy. Now, this is really interesting too, because what do we get at the end of this month? The Evergrande hearing, because they did the debt restructuring. And this is the second time that they delayed it. Yes.
Well, allegedly we'll have it. We'll see if it gets pushed back again.
And what do we have in, let's see, 8 days? What do we have in 8 days? We have the Taiwanese election. So there's a lot of shit going on right now in China. I think we should be watching their markets because I think it's going to get really interesting over there. And I'm just saying that in general, because I think a lot of their issues are starting to finally come to, I guess, fruition. They're boiled to the top because what's his name? Even the President Xi, he also mentioned in his New Year's address that, there's a lot of headwinds for China in the year to come. I don't necessarily know why or how often China has actually said stuff like that, considering, they've talked about how they're not going to release any more information on their unemployment rate for their youth. That happened a few weeks back. They cut words of deflation off. There's a lot of stuff that's going on, and I think that this is starting to get really frothy here. It says the company has sizable exposure to China's real estate sector, apologized to its investors in a letter in November, and said that it was heavily insolvent to up to $64 billion in liabilities. So now the big concern here for me, I think, is a fire sale would probably come, and anyone who is insolvent or is willing to file for bankruptcy, if they start selling off those assets, they're going to realize how much they're actually valued at. And that could be an absolute death spiral. I mean, that could mess with mess with Evergrande, Country Garden, what have you, whichever ones are in a lot of trouble. And that's going to bleed over out of the Chinese, real estate property market. That's going to go to the banks. Obviously the bank right there. Any exposure that we have or any other countries have to Chinese banking, HSBC, Deutsche, this is pretty problematic. So it's something that we need to keep an eye on. But I'm definitely keeping an eye on what Evergrande's going to be doing on, I think, the 29th. I think that's the date it's coming out. They're hearing again, but I don't know. It doesn't look good over there. If we look at TradFi, oh my goodness, TradFi just went negative. Let's take a look at that real quick. Yeah, so S&P down on the day once again. Looks like they are selling off every single rally. Now this is where it gets really interesting because quietly, let's look at the NASDAQ actually. Quietly, since the last day that we had up in the height in December, I think, yeah, like the 29th or 28th or something like that, we are down 4.21% in the NASDAQ. That's a pretty good move to the downside, right? It hasn't even seemed like it. Obviously, it's only been 4 trading days in the year so far. So that's a really interesting thing to see in the market to start the year. Some people will say that, they're taking profit here. Obviously, we have our own ideas of what's potentially happening here. If we look at the S&P.
Well, I think people are taking profit and they're just moving it to somewhere safer because they know the market's going to sell off more.
Yeah, why would you want to be holding assets when you had a great year last year and, well, probably won't have that same this year? It's really, I just don't see the value in equity market. Given the risk, I don't see the value in the equity market compared to what some of the yields were giving you towards the end of last year, right? So seeing this here, obviously they're taking profit because they know there's not going to be a lot of value possibly going into this year. And if we look at this as well, I think that there is a chance that we could get one more bounce next week before we get into earnings season for TradFi. That's one concern I do have. And that would kind of play in line with the S&P here, which is a potential head and shoulders. I think I saw it right over here. It's kind of today's market actually kind of makes it look a little bit different than I anticipated. But let's see, patterns, yeah, head and shoulders, something like this, right? Left shoulder, head, which would have been the top down here, maybe a little bit of a lower right shoulder, and then we break through. The key thing here with the S&P is to see if we do get a rally before earnings come out, because that could be a bit of a chance to trap some longs and also just get people out of the market that maybe didn't get out fast enough, because it did move fairly quick, this market, to start the year. The other thing to keep an eye on is that we have tons of all these gaps to the downside that we just never filled because we never backtested shit the entirety of the last quarter of the year. So when I see this here, this massive green candle, that's one thing that's a fair value gap that's got to be filled at some point. And then there's obviously market open to market close, or market close to market open gaps that need to be filled as well. There's not a lot of support. I feel like we're going to start seeing a lot of this change going into post earnings, and then obviously in the March, where March is going to be complicated, but the fact that they've sold off every rally this entire week, and this is what, our 5th or so day of just red in the S&P, maybe even the 6th. I don't know. It seems like TradFi is in a pretty bearish state right now. Doesn't mean that there is a trend 100%, but it just means that we have to keep an eye on. I think this, if anything, does get accelerated once we get to that earnings season and we start seeing some of those numbers. If Nike and FedEx were any indication of that, a precursor to what we'll see, then I anticipate that it's probably going to be some bloody days ahead come February. What else can we take a look at? Nothing too crazy outside of that. You've seen that Apple has actually pulled back significantly. Here we are, Apple. Apple, hey, my put's actually in the money now. I just realized that. But the thing with Apple was a double top. Hey, what was that?
I said you love to see it.
Oh yeah, absolutely. Apple was extremely overbought. I remember Ace brought this up a long time ago, talking about Apple's market cap given from COVID to where it was currently. It was absolutely insane. But the thing that was really interesting, where I bought the put, was because we were seeing this double top. We got right up here, and then we got rejected from it. Anytime you see a double top and you're pretty much going up because of a Santa rally, I don't know, it just seemed like a good idea to get the hell out of the market. And with a few months left in this put, I'm glad that the price has definitely gone down significantly to start the year. Now, the thing that I wanted to take a look at, because I think there is a chance we could see a bit of a push higher, is oil. I don't necessarily think that we are seeing inflation come back. I think that we're seeing deflation, if anything, take over the majority of the world, global economies. But I do think that there's a bit of a push to the upside here. And again, I'm just trading this structurally. We got 5 waves down. I'm expecting 3 waves up, A, B, we got our B and our A. We're waiting for our C to come up here. I think that, the 200 EMA could offer a good opportunity for us to find some rejection. 78, I think is the level there. Thing is, if we do get some news that something bad happens, sure, could this push up a little bit higher? Yes, but if we look back to October when we got the news out of Israel and Hamas, that was something that probably I would say not in a bear market, but in a bull market or something like that, that would definitely push the price of oil up significantly. And it only did for a short period of time, and then it just absolutely rolled after that. So I don't think the news headlines are going to save oil at this point. I do think that it might help it in the short term, but I do think that we need to finish off this corrective pattern, and then it's going to come tumbling down. And the thing is that we are seeing demand for oil drop significantly. And what does that say about the broader economy? It means that people might not be traveling as much. People aren't manufacturing as much as we gotten from a lot of the manufacturing data. But if people aren't manufacturing and there isn't as much demand for travel, which we'll probably see going into the next few months, it's a good idea to probably think that the services sector is probably going to take a hit there, which means that there's probably going to be a lot more unemployment. So it's something interesting to keep an eye on with oil. And the last thing I just want to go over is gold, because we were talking about this gold trade so much. So what I'm looking at here is 5-wave move down, and we've got our first 5 waves down. We got our 3 waves here, but now we're waiting for our wave 3, and our wave 3, which is this blue line, has 5 waves within it. So I think we're going to see probably is a bit of a bounce here for gold, put in a lower high somewhere around maybe 270 or so. And then after that, we're probably going to see a pretty nasty move down for gold, maybe into the 1900s, a small bounce, relief bounce, and then probably test the bottom of this parallel channel around almost 1900 in that range right there, 1880, 1900 or so. And then we're going to see where we stand, because if the market hasn't sold off significantly at that point, maybe gold can go down a little bit more. But we know that if gold goes down, the dollar is going to continue to rise, and that probably means that equities are selling off. And that just is pretty much the case for a stronger dollar going into this year. So that's pretty much all I have on the front of things that we need to keep an eye on TradFi. I think next week's going to be very interesting, given earnings are following very soon. I think they could be, like I said, pushing up a little bit more, but I don't know, man. It doesn't seem great out there, especially if you're trying to trade this market. I mean, selling off every rally, and nothing you just can't buy, like nothing can grab a bid at this point, and the news just isn't great. There's nothing else I could say at that point.
In the famous words of Kevin, it's not great. All right. What is great is the people who watch our show. We appreciate you very much. Ace, thank you for being here with us today. Anyone else who is watching, appreciate you as always. Do us a solid, like, subscribe, comment, all of that good stuff is appreciated. We'll be back on Monday to kick off week 2, 2024 here in the markets. Not expecting anything too crazy as we close out today, but hey, listen, we've been caught off guard before. Maybe it happens again. Stay safe out there, everybody. Remember, we're in this for the long haul. This is not the show for you if you're just here for some quick flips. We are not your guys, but we will try to do the best we can to keep everyone calm throughout the storm that is the financial market. So thank you for being here. Have a great weekend, and we'll see you on Monday.
Take care, everyone.